Welcome to the AI for Career Success video overview by Curt Robbins. We're experts at AI coaching and helping professionals like you and your employees upskill in AI. Today, we're going to be breaking down Tesla's recent first quarter earnings report. And let me tell you, this was a document that held a major surprise for Wall Street, and more importantly, it revealed a really high-stakes pivot in the company's entire strategy. So here's how we'll walk through it. We'll start with those unexpected positive results. Then, we'll dive into the key financial metrics to see what's really going on. After that, we'll unpack this massive increase in future spending. That's the twist. We'll explore where all that capital is going, and then we'll wrap up by framing the huge challenge this new strategy really presents for Tesla's future. Okay, let's get right into it. The overwhelming feeling leading into this report was frankly negative. Analysts were really bracing for some significant financial pain, especially when it came to Tesla's cash reserves. And the scale of the surprise here was, well, it was massive. The market was fully expecting a cash burn of over $1.4 billion. But instead, Tesla reported a positive free cash flow of $1.44 billion. I mean, that's a nearly $3 billion swing. This was the headline number that just completely defied all the forecasts and sent a real shockwave through the investment community. What makes this result even more interesting is the context. This wasn't a quarter where everything was firing on all cylinders. In fact, their main automotive business was facing some pretty serious headwinds, and their usually reliable energy storage division actually saw a significant 12% decline. So that begs the really important question: where did all this positive cash flow actually come from? To answer that, we really have to dig a little deeper into the underlying financial data from the quarter. This is what's going to help us understand the complete picture behind that surprising headline number. Now, on the surface, the top-line numbers looked pretty solid. Total revenue and automotive revenue both climbed 16% compared to last year, and vehicle deliveries were up a modest 6.3%. The auto gross margin held steady at 19.2%. Now, these are respectable figures, for sure, but they don't explain that massive swing from an expected cash burn to a positive cash flow. And here is where we find the first piece of the puzzle. That positive cash flow wasn't driven by stronger than expected performance in the business itself. It was really a result of timing. Tesla just spent a lot less money than anyone anticipated. Their capital expenditures, or CapEx, came in at only $2.5 billion. That's almost $2 billion below what analysts had forecasted. So this delayed spending created something of an illusion of stronger cash generation. But here's the thing. That delayed spending isn't going away. Not at all. In fact, it's about to accelerate dramatically. And that brings us to the central twist in Tesla's whole financial story right now. To give you some perspective, let's look at last year, 2025. For that entire year, Tesla's capital expenditures totaled around $9 billion. And that figure represents all their investment in growth, new factories, and technology for that period. Now, take a look at the plan for this year, 2026. The company had already projected a huge increase to $20 billion. But in this report, they tacked on another $5 billion, bringing the total forecast to $25 billion. That implies they're going to spend an average of $7.5 billion for each of the next 3 quarters. That is a truly massive ramp-up in spending. And the company's own leadership confirmed this. Tesla CFO Vaibhav Taneja said it directly. He said, "We are in a very big capital investment phase." And he also made it very clear that the positive cash flow we saw in Q1 was a one-time thing. He basically told everyone to expect negative cash flow for the rest of the year. So the crucial point is this. When you're planning to spend $25 billion, you need a very clear reason why. This isn't just about building a few more car factories. This is about funding a fundamental pivot for the entire company. And the scope of their ambition is just huge. This capital is going towards a whole suite of highly advanced, really long-term projects. We're talking about massive investments in AI infrastructure, the development of self-driving robotaxis, their Optimus humanoid robot program, funding for 6 new factories, the Terafab chip-making project, and developing their next-gen custom silicon Dojo 3. CEO Elon Musk justified this historic level of spending by framing it as a necessary investment to unlock a much, much larger stream of future revenue. The big bet here is that the profits they'll eventually make from AI, from software, and from fleet-based services will completely dwarf the profits they're making today from just selling cars. And this brings us right to the core tension at the very heart of Tesla's strategy. The company is making one of the most expensive bets in corporate history, and, the outcome is far from certain. Let's put it plainly. Tesla is using the profits from its established car business, a business that's already facing more competition and pressure on its margins, to finance this monumental leap into the unproven and highly competitive worlds of AI and robotics. It is the definition of a high-risk, high-reward maneuver. And so, the ultimate question this earnings report leaves us with is this: are we witnessing a successful transformation in real time? Is Tesla actually evolving from a car company that happens to use cool tech into a genuine AI and robotics company that also happens to sell cars? That $25 billion investment is their answer, and believe me, the market will be watching very, very closely to see if that bet pays off. This is where we teach you AI and help you get smarter than your competition. If you like these videos, use the QR code at the beginning to buy us a coffee or hire us to coach you or your employees in AI. We also recommend that you subscribe to the AI for Career Success YouTube channel. And please like, comment, and share this to help us reach a wider audience. Thank you for watching.